Jay Powell is the pilot of this airplane, and this airplane is called the U.S. economy, and he has put us into a holding pattern. He's got us circling because he doesn't know whether to go up or go down or where to land. And it's because of the unclear signals that the market's telling him and the Fed, right? On the one hand, you have the Iran war and inflation threatening to go back up. On the other hand, you have some really bumpy jobs reports. And, 1 month it's deeply negative. The next month it's deeply positive. So, it's not a perfect analogy, but the reality here is that the data that the Fed is trying to listen to, it's kind of like it's communicating through a $3 walkie-talkie, okay? And so it's not clear, and that's why we're in this holding pattern.
Yeah, a lot of people go with the nautical sailing metaphors. I remember the Fed says we're navigating under the stars in cloudy skies or something like that.
Yeah.
I think that the helplessness of the airplane analogy is a little more apt here. Landing this plane could get scarier and scarier, and there's not really much we can do as passengers. Last month's consumer sentiment data did not show panic, but the vibes could get worse for sure. The economy could get worse. And while the level of unemployment is fairly low, historically speaking, some of the labor market trends are a little worrying. There's stuff that we could say about the labor participation rate. GDP got revised down recently, just this morning. So please guide us to safety, Dan. Jay Powell can't fly this plane for much longer, but I trust you.
Well, the jobs report looked amazing recently, right? But zooming out at the larger picture, we see a very strange reality. And not in the article that we're referencing right now from Berkadia, but in one of my favorite newsletters from J+G Conklin, he notes that the Dallas Fed is calculating the new monthly break-even for job growth at negative 3,000. What? Negative job growth. So to keep unemployment flat, we need to lose jobs? Is that so literally anything above negative 3,000 decreases the unemployment rate? This is what happens when a large number of people leave or exit the workforce.
Yeah, that is that's crazy. And I like that you referenced that recent update from the Dallas Fed, because I was going to try and add it in myself, but I'm glad that you did too. Understanding that labor participation rate story helps to explain these moves, I think, in the unemployment rate. We have an aging population. There's an interesting report from the Indeed hiring lab as well that shows how demographic changes are moving things. And their quote is, as the population ages, workers move into older age groups where participation is lower. At the same time, fewer younger workers are entering the labor market, and prime age participation rates have declined slightly. Even with strong participation among prime age workers and later retirements among older adults, that population is gradually shifting towards age groups with lower structural participation. There are more people that are alive that are retired, and that's going to push down the labor participation rate much more than people being discouraged from seeking a job. I remember whether it was during, as we were kind of coming out of the Great Recession, all of this, people were qualifying the unemployment numbers with, labor participation rate's pretty slow. I want to issue a slight corrective to that too, because these changes in the labor participation rate are a little bit smaller than the shifts in the unemployment rate. We're talking about changes within 1%, from like 62 to 63 or something like that when it comes to labor participation rate. So there's a lot of factors, I think, and economic signals just still are leaving us in this middling uncertainty, which is not really hopeful, but it's not, I don't think that we are experiencing like a huge shift in labor participation.
Yeah, I mean, that's a really good point. And I think that the bottom line here is that there's a lot of noise in the data, right? The massive swing between positive jobs, negative jobs, make it very difficult to truly gauge the jobs picture and what's real and what's not. Simultaneously, the volatility in the oil market and inflation expectations also creating a pretty muddy picture. So here we are in this holding pattern, too high to land, too low to have beverage service. We're just kind of in the in-between. So what's going to shake things loose here? I think additional data, additional time and clarity. And into the war in Iran would be helpful. A bit more time would help the jobs picture kind of shake out, and the real health of the economy provide a clearer picture. What are we doing about this as investors in multifamily? Cautiously approaching deals to invest in and acquisitions, and prioritizing low supply markets with either assumable debt in place or a unique ability for us to operate there.